Hello traders, Gary Wagner here just after 10:30 in Honolulu, 4:30 in New York on Thursday, the 3rd day of October, 2013, and this is the daily report for gold and silver. Precious metals, absolutely undecided, currently trading well off of the lows that we received this morning, and you can see these lows right down here when it actually went and tested 1301.60. That's our low. High 1322.50, currently trading at about 1316, 1317, puts it unchanged to up a little bit or down a little bit on the day. Silver, as you can see on a daily chart, this small bodied represents today's trading activity. Low 2136, high 2196, and it's currently trading off about a nickel at 2167 on the day. You know, interestingly enough, the equities market has been reacting to the government shutdown over the last few days, and it's been casting its vote with decidedly lower pricing. However, in the metals markets, we have had pressure on the dollar. We did really expect to see that, but we really haven't seen this market move out of its downward channel or the downward channel that it's been in. And of course, you can really see that when we look at these descending tops. When we look at the latest series of highs, we have consistently had a lower high as this market has been moving down the channel. Now, we did get a test today of 1300. That was an intraday test. We're well off of that, trading at about 1317, and you can see that right in here. This is that low that came in. And on top of the descending set of highs that we're getting, we're also getting lower lows. The lower lows are quite evident here, and this most recent low at about 1276. And so that's literally creating basically a downward slope or downward channel as this marketplace trades through the range. That, within the context of the fundamental news that's out there, I believe is quite interesting, because for gold not to really have decent upside spikes in the face of a government shutdown, this kind of uncertainty, and the fact that the two parties really can't even talk to each other and come up with any kind of compromise days into this crisis, and the fact that we've still got gold trading in a downward channel tells us that this bearish pressure is not only absolutely evident, but propelling the market and controlling price action on a daily basis in light of fundamental data that is going on in the world. And really, given the context of where the market's currently trading at, basically unchanged, up $1 on the day, 1316, this is that tremendous drop that we witnessed, in which the market goes down to 1276, I believe, intraday. Then we get this tremendous spike yesterday taking us up, but this 1320, this is an area that has absolute resistance in the market, because when the market came up and tested this area, as you can see, selling came into the market, pushing the market down. This is the intraday low we just spoke about, 1301, and now is basically trading back to unchanged on the day. And as I said, given the fundamental news out in the marketplace, to see this consistent kind of pressure in gold really tells me that the bearish momentum that has been building maintains its strength in the market. And even with the government shutdown, we've got the precious metals under pressure. And here's what I also find interesting. We're in a defined downtrend. There's no doubt about that. But with the fundamental news that's out there, you get a marketplace that moves to lower pricing, but then spikes up, gives that back, attempts to muster up some kind of rally, and then goes to a lower low. In one way, it is a classic market moving down. However, with the fundamental data in there, this basic downtrend has been interrupted by these upside spikes. So there's absolutely uncertainty in the market, and I can tell you this, the pressure is to the downside, but with the fundamental news that's out there and the fact that they can't resolve this crisis, it makes me hard-pressed to recommend going short in the market. At the same time, the fundamental data tells you that we could see an upside pop, but the technicals are telling us that we're absolutely in a downtrend. So it doesn't make sense to buy. And that's really why we have been sidelined in terms of trades. Now, in terms of physical buying, that's a whole different ballpark. And you want to buy even as the market goes down. When you feel we've hit some sort of bottom, then we want to really aggressively add to our positions in terms of physical. But in terms of a trading market, my sense right now is that the best thing that we can offer and the best thing that we can do really is stand on the sidelines. Now, if you recall, yesterday we talked about the fact that the two-day pattern that we were seeing within the marketplace itself, we had an engulfing bullish in silver and a piercing line in gold. We certainly didn't get any kind of confirmation or confirming candle today. We talked about the fact that to actually get a confirming candle, we would need to see a higher high and a higher low. We got that, but we also need to see somewhat of a green-bodied candle. It's got to be a long-bodied candle, something like this, and we're certainly not getting that kind of activity. What we have learned from the marketplace today is that 1300, at least for the time being, seems to be a pretty good area of support. We've identified 1274, this being absolute support currently in the market, and then 1300 as our secondary point of support, or our current level of support in the market. You can see that right in here. Of course, I've drawn in that green candle, but the low did go to 1301. In terms of resistance, we have a couple of different areas. The absolute top in terms of resistance is still going to be at 1372. We have another area at 1350 and one at 1330 in terms of straight levels of resistance. Now, we are trading in a downward channel. There's no doubt the pressure is still there. In terms of a wave count, I am still looking at a bearish wave count. We've had no indication to change that, but this was our wave 3. This was our corrective wave 4. In terms of corrective wave 4, I believe we saw an A, B, and C, and we're moving into this being wave 5, and that will be composed of a 1, 2, 3, 4, 5, or probably a 5 count on that particular wave, or wave 5. Silver, actually, when we look at a silver chart, is a much easier read in terms of the marketplace itself. Absolute defined downtrend as the market moves to $18 from what, about $35, $36. Absolute defined uptrend. Market comes back down. We have tested, as we have in gold, 61% retracement. 1274 is a corresponding number there. Solid Japanese average chart weekly is solidly still in red. We are still having an absence of these upper wicks on the last 2 weeks. That tells us that it has not traded at or above the midpoint of the prior candle. As I said, my belief is that the pressure is still to the downside. We are sidelined in the market. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the weekly wrap-up on Friday. Bye-bye.